Good morning, everyone. I'd like to welcome you to today's online presentation titled 2013 Outlook First Quarter Update. Now I would like to introduce you to our speakers. We have Armen Kevorkian, Vice President, Alpha Investment Research, and Tim Barron, Chief Investment Officer. Over to you, Tim.
Thank you very much. So as some of you may know, and I'll put the disclaimer on the screen and you can listen and read all those wonderful words. But as some of you may know, we've been publishing an annual outlook since about 2009. And as many clients, we're seeking a more concise representation of our perspective on economies and on the markets. And importantly, this really represents a perspective from what our investment committee sees and is intended to think about markets and economies during the next 12 to 18 months. This presentation really represents our first formal quarterly update of that annual review. And what we're going to focus on are changes in view, changes in environment from that annual review. If you'd like to access the more robust and really very long piece, you can do that from our website, which is siegelrc.com. So first, I'm going to go through that first quarter update, and then I'm going to ask Armen to review in some detail the changes in our thoughts regarding high yield. So starting with the U.S. here, we began the 2013 outlook looking at continued uncertainty in economic direction, and we think there's certainly been marginal progress in that uncertainty, but the uncertainty as a notion does continue for the U.S. markets. Interest rates low, expecting future increases, and I guess you could say we were right somewhat because certainly interest rates have ticked up. Armen's going to cover that a little bit later, but there's clearly been quite a bit of volatility in the interest rate environment of late. We know the Fed is seeking to lower unemployment through its activities, and this is an area where unemployment has been quite stubborn. There are structural issues which cause concern, and we hear progress, but the progress has been painstakingly slow in the beginning of 2013. The U.S. housing market is recovering. That's continued, but there are certainly issues that are underpinning that even now. There are still many foreclosures outstanding, clearly much less than there has been, but there still is a fairly robust number of foreclosures and loan issues for people who are still underwater substantially on their mortgages. Lending continues to be an issue for many as the era of easy money is behind us, and for anyone who's gone through the process of home equity loans or getting a loan, they know it's been much more painstaking than certainly it was 5 years ago. And now we're seeing mortgage rates going up. Yes, we've had some price increases, but for the most part, that's really been on a relatively modest subset of houses, as there still is a lot of overhang from people who might be interested in selling, but are concerned about prices even yet. Positive developments in North American energy. This is really unchanged for us, but there are a lot of environmental questions existing. Good news here for sure overall, but still not being embraced by everyone as the solution long term. Low inflation unchanged, and signs even now that the low growth is going to continue, and that low inflation, or even perhaps lower inflation than we've seen, might be in the cards going forward. Deleveraging, stronger balance sheet unchanged. Consumption and spending, there are some signs of an uptick. We're seeing some positives in some of the larger consumer items like automobiles and home improvement, but continues to be muted overall. Corporations, rather than investing in their own businesses, seem to be happy to share their cash flow via dividends as opposed to investing in their businesses.